Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of February 12th. This week, we get a lot of inflation data that will give us clues to when the Fed may cut rates. Tuesday, we get the consumer price index. Markets expect this to fall from 3.4% down to 2.9%. Then Friday, we get the producer price index. Markets expect this to fall from 0.98 down to 0.70. So with this as a backdrop, this brings us to this week's topic. When will the Fed likely cut interest rates? So to answer this question, I'm going to do something that my high school teachers will cringe at. I'm going to answer this question with a question. In fact, I'll answer it with three questions. So the first question is, why can't the Fed just tell us when they will cut rates? There's three reasons why they can't. First of all, they know that inflation is slowing, but they're worried about a head fake and inflation returns. Second of all, they worry about an asset bubble. So investors start buying and pushing up prices of investment assets like stocks or gold in anticipation of a rate cut. And third of all, if the markets anticipate a rate cut, markets lower interest rates and they start to ease lending conditions. This could all increase inflation. The second question is, what do we know about the Fed's plans? Well, the Fed said it in their dot plot, and this is their quarterly report where they give their expectations. They said that they plan to cut rates 3 times in 2024. As you see here, though, the markets expect the Fed funds rate, this interest rate, to fall from 5.37 to 4.32 by year end, or the Fed cutting rates 4 times. So the Fed says 3 times, the market says 4 times. There's a disconnect. The third question is, when will the Fed cut rates? So the next Fed meetings are March, May, and June. As you see here, there's an 83% chance the Fed doesn't cut rates in March. So I think March is pretty much off the table, but this leaves May and June. So I think it's going to be one of these 2 months because while the economy has been very resilient, high rates are weighing on economic growth. Keep in mind, it takes about 12 to 15 months for the full effect of a rate hike to be felt on the economy. So we still haven't felt many rate hikes yet on this economy. And I do think it's most likely going to be May when the Fed first cuts rates, because last week, Cleveland Fed president and voting member Loretta Mester came out in an interview and she said she expects the Fed to gain confidence to cut rates later this year. That's good news. But more importantly, though, she let it slip out. She said, it's not necessary to move only at meetings with forecasts. So forecasts are referring to this dot plot. Again, these dot plots are released once a quarter. So she's basically saying we don't have to have a dot plot forecast released to cut interest rates. So June has a dot plot release. May doesn't. I do think it's going to be May. May is our best guess for when the Fed first cuts rates. So the overall takeaway, the markets are focused on when the Fed will first cut rates this year. Our best guess, again, with inflation falling faster than the Fed had anticipated, and the Fed does not want to keep rates too high for too long and push the economy into recession, the first cut will likely be in May with a number of 3 or maybe 4 cuts in total for 2024. Thank you for listening. Again, please follow us on Twitter for more information. Talk to you soon and have a great weekend. Thank you.